Hi, I'm Mark Rosano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today we're going to go through the EIA broken up into the normal three parts of overview, deep dive on refined products, and then exports and what's happening in the global market. I also apologize, as you can tell, I am sick. My little petri dishes at home tend to always get sick from school, so I apologize and bear with me. And then just to reiterate, if you could subscribe, like, and please share, we want to keep this free, and we can do that by the more people that like it, watch it, and share it. So please keep that in mind as we go through some of this data. So just to kick it off right now, we're going to talk with you about the next hurricane coming through the Gulf of Mexico, Hurricane Zeta. Yes, we're at Z already, so to give you an idea of how many named storms we've had this year, it's been quite frightening. And luckily, knock on wood, we're going to continue to see limited damage overall, just because it's supposed to strengthen to a hurricane, a level 2, and then dip off. So far, the refiners have said that they're going to maintain operation at a reduced rate, but maintain operation through the storm. And you can see here on the left, there's the amount of production coming out. So right now, this is as of the most recent. The oil shut-in is about 50%. It's about 914,000 barrels, 915,000 barrels a day. And then gas is about 1.5 BCF. So definitely some implications in terms of if refiners continue to operate, oil production comes down, we will get bigger draws next week. So we had a big build this week, we'll have draws next week, and then we'll start to get to the other side. And that's as long as refiners are able to maintain some of the production that they've talked about. But right now, it just seems as though we're going to get a decent draw as we go into this week, into next week. And just to give you an idea of what that looks like, when we look at what happened this week, we had a build of about 4.32 million when we look at domestic, but we did have some draws from the SPR, or the Strategic Petroleum Reserve, that gave us a total build of 3.66 million. Now, as we talked about last week, we expected a big spike in production. Here's the spike in production back to 11.1. And this is just an aggregate of all of the Gulf of Mexico coming back on after the most recent storm passed through. Some of that will back off, so we'll sit at about, let's call it 10.2 million barrels as we exit this week into next, which will result in additional draws in Pad 3 based on what these factors are. So you can see that there was a big build in Pad 3 as a lot of that Gulf of Mexico comes back, fills up the tanks. We had a build of 5.3 million, and we should see that some of that come off as we go through the remainder of this week, especially as we've had some of the ports shut down ahead of the surge, which is supposed to start really as of right now, it's supposed to strike for Wednesday afternoon. This is just looking at total inventories. You can get an idea that we've kind of leveled off. We're still within a comfort range when we look at the SPR as some of that continues to whittle down. We typically start to get some draws here, and unfortunately right now we aren't, but again, we'll have to look at what next week looks like as we go forward. And the one thing that we've been talking about is Cushing. So here you can see, Cushing had pretty stable builds, and then it kind of flat lines, then starts to go back up. So we had a small draw in Cushing overall. But the reason why we talk about Cushing is because the spreads coming down from Cushing into the Gulf and into the international market remains fairly tight. And all that means is it's difficult to see ways of getting additional sales of our crude into the international market, specifically Europe. One of the things that we'll talk about a little later is the export market. We actually had a big increase in exports to about 3.4 million. And it was really just, again, timing as people rushed to get out ahead of the storm. But we also had a huge pickup in Alaskan sales going over to China, which, just based on what we're seeing, that it's something that could be relatively stable in terms of additional sales going from Alaska into China. Then the question is going to be, well, now that we have an official lift of Canadian caps, what does that look like for imports from Canada into the U.S.? Again, the Canadian production remained very far, well, at least decently far below the cap. So to take it away doesn't mean you're going to all of a sudden get this huge surge. But again, it'll start to put pressure on Canadian coming down and Mayan blends at the coast, especially as we've have Repsol talking about potentially buying more Canadian, especially as the expectation of additional Venezuelan sanctions come in. and just ways to kind of find some of those flows. So we will see additional Canadian inputs. The question will be, okay, well, if it's coming into the coast, how much of it is just straight sold into the market? How much of it is run into the refiners, which again will push more crude into both Cushing and into commercial storage within PADD 3. Now, when we look at commercial storage, excluding the SPR, you can see we remain on seasonally adjusted all-time highs. Nothing crazy. Again, it's just a matter of we're starting to level off. So the bigger issue, as we've talked about through the summer, we normally get draws. There was never a view that we would not get some draws as we had OPEC cuts, as we had refinery maintenance, starting to slow down as we went through the summer months. The question now is what happens next as we have COVID cases increasing. Germany has gotten in a deal to have a partial lockdown. France isn't far behind. And what does that look like, especially as we have Libyan flow coming back as Italy and Spain, cut runs, which is something that we're going to talk about in our Turkey show and looking at the Mediterranean overall. So then once we dial that down into PADD 3, you can see that we did get that increase. But when we look at the top of the cloud here, you can see we normally get a little bit of an increase here. So it's not something that's it's not surprising. It's just obviously we remain at seasonally adjusted all-time highs. And again, it's more just because we've had three massive storms. Now, it's also important to appreciate the fact that we've had draws, but we're still above the top of the cloud with not one, not two, but three hurricanes that have impacted production. So then the question is going to be, what do we look like as we go through the winter months, and as hurricane season ends and some of this stuff starts to normalize, as we do have an increase in activity of on the fracking side. Now, when we look at imports, here we talked about an increase. Again, it's more timing delays. We actually had a pretty big increase in PADD 1, about an 80% increase overall if you kind of look at just where the flows are. Again, all timing. It's not something that we think is going to continue in PADD 1 in the near term. The question is going to be, what does PADD 2 look like? Again, some of that flow coming from Canada. And then when we look at PADD 5, again, it's just going to be seasonal in terms of what those flows are. PADD 5 is going to continue to stay around this level. Again, still below year over year in the 5-year average, but it's something that's going to remain fairly elevated, versus some of the beginning of October. And again, as we go into that seasonal period where we do get a little bit more driving, people start to prepare for Thanksgiving. What does Thanksgiving look like if we are considering what does COVID look like, and our families really meeting? How does that change? So that's something, as we get a bit more clarity, we're going to start to look at that. And it's going to come down to hospitalizations, cases, what are people thinking? So it's just something where it might be a little bit smaller. Some of the guidance is some avoidance, some nuclear family only, or tighter components. But again, it's still very early to start to identify that. Now, when we look at runs, we talked about having a little bit of a spike. The view was that we were going to go to about 74.6, 75. Here we are at 74.6. I initially thought that we could get another dip down to about 70. Again, that won't happen here. We're starting to come on the other side where you start to see some increases in runs, just as we have demand for heating oil start to pick up, which it will show up in the distillate, which we did see, and just some adjustments overall, which will support activity. Again, the view is that we get closer to 80 as we go through November, and I think right now we're kind of on pace for that. Again, we had an increase of runs of about 380,000 in PADD 3. Again, as people normalize post the hurricane, we won't see the same type of dip, just because again the refiners are only paring back a little bit. PADD 1, we did have PBF say that they've walked back some runs through October, which has already been recognized. So that's not something that should be relatively new. So as we go forward, we should start to see a little bit of an increase, tick by tick on a weekly basis as we go through the remainder of October. Not only just October, but then as we go through November, we'll start to shift a little bit higher. And we'll look at that on a seasonal level when we go into segment 2. Here is total demand. Again, demand is calculated. That's something that's why we look at the average, we look at the flow. We had a gasoline increase of 256,000 barrels a day, relatively good. Again, it's within our comfort level of that 8.5. The gas buddy and some of the other data points that we look at actually had a decline over the last 3 weeks, were 3 weeks worth of declines. But again, it was 0.5%. So it's kind of a margin of error, and it's, again, timing delays. What were exports? What was gasoline production? What is storage? What is the estimated demand? So again, it's just something that we think is going to slow down as we go into next week, especially as we have cases increasing and some people walking back some of their activity. Distillate had a nice spike. You can see it's above the 5-year average. Still a little bit below the year over year, but again, it just comes down to when are people filling up. We've had some snowstorms. We've had some cold start to come through, which again is going to pull some of that heating oil demand. Trucking, which we'll talk about, still remains elevated, came back a little bit within our confidence range, but again, still remains strong. And propane had a little bit of a walk back, again, still up over year 5-year average. And that's something where if you have been to a restaurant, obviously propane demand locally and internationally is going to remain fairly strong. So that's something that we think is going to be fairly consistent as we go forward. Gulf Coast oil floating storage, again, as ships move back based on moving out of the way for the previous hurricane. Now we have Hurricane Zeta, which means they're going to move again, which is going to push that back to zero. So we're still going to kind of hang within the bottom of this range. And just given where the flows are and where some of those floating storage is and what's in transit to the U.S., this will remain fairly depressed as we go into November, and as you start to see some of these markets trying to play with who has storage, where the storage builds, and we go into way more depth on storage builds and draws on a floating side and on a onshore side in segment 3. Now, as we look at the imports overall into Pad 3, again, as we said last week, we were gonna fall back within the cloud, but it was gonna kind of bump along the bottom. It happened. There's nothing really to say one way or the other. It's going to remain depressed, just as refinery runs remain at that 74%, 75%, and just going to kind of go sideways. We should see another dip just as things shut down, just as the loop. Some of the others in Louisiana start to see some impacts from the storm. But as we saw last week and the week before, those come back fairly quickly. So it's just going to be a matter of, do they have power? Is there any lasting damage? And then they'll start to come back, and we'll start to see that hit. We just wanted to touch on Pad 2. It's one of the things where we just want to look at the 5-year average because, as we've said, we expect an increase in imports. But when you look at the 5-year seasonal, that actually makes sense. Like, we typically do get an increase. The question is going to be, are we going to fall above that as we have some additional Canadian coming through, which is likely. The question now, as we go into the end of the beginning of November, and a lot of the harvest is starting to wrap up. I think corn is at 77% completion. Soybeans is at about 85% completion. So as we start to see some of that normalize, that does pull in a lot of diesel. That starts to drop off, and then do these imports continue as they either flow through to Pad 3, or will they stay within Pad 2? So this is one that we're going to continue to watch to see how does that, if it starts to fall above the average. But right now we think it's going to go above the 5-year average. But again, nothing concerning right now, just based on where the indications are as we go into the remainder of the month into November. This just puts into context just how low utilization rates are in the U.S. Again, we remain confident that we're going to stay below that line. It's just we will start to see that trend higher as we get closer to, let's just say, the bottom of that the cloud of that 80% range as we go through the remainder of the year. The question is going to be crack spreads, which remain depressed, and what our exports look like, which, as we called for, they started to fall as Europe remains under lockdowns, and lockdowns are increasing. Those are going to be some of the impacts that we expect to continue to roll through as demand declines in some of these key areas that we export to. Latin America remains fairly stable right now, which we'll talk about in a little bit more depth. But then the question is going to be pricing. We've been talking about some pressure on pricing. We have it. We think there's additional downside, but again, nothing dies in a straight line, so we will start to see some of the spikes. The numbers were bullish for this week, but again, started to get a little bit better for next week as again, the hurricane starts to draw down. We will see some offsetting impacts on refinery demand, but again, it still bodes fairly well for next week. The question is going to be November, where we remain concerned about demand, which we'll talk about in more depth as we go into our economy show. And then as we turn into our segment 2, we'll go through the refined products piece by piece to give a bit more color on what we're thinking on the next few weeks.